let's just take a quick recap then of the weekend's news and what we're looking at this morning. And as you can probably see from the charts I'm sharing, the middle ones in particular, the DAX, already under a bit of pressure this morning. There's some general negative tone coming from Asia overnight. We'll discuss the reasonings behind that. And then you've had some single stock news as well, just weighing on sentiment. Deutsche Bank shares down over 6% this morning after further capital raising was announced at the weekend. As well, when you start to look at the DAX in a little bit of a longer time frame, if I put this on a 60-minute candlestick, you can see we gapped below in the futures that 12,000 level. And then since we've gone through the cash equity markets in the last half an hour, it's accelerated some of the selling. But you can see here that big upward move that we had kind of mid last week. And of course, that came after the speech that we had overnight. I think it was Tuesday going into Wednesday last week, with Trump sounding presidential. We had that kind of move and swift move into midweek as well about the probability of a March rate hike coming from the Fed. But that was when we had that really big upward move. That 21,000 was breached in the other US indices. The DAX as well had followed suit at the time. So a lot of that just being taken back at the moment. And just looking at on a 60-minute candlestick, the last 2 weeks of the DAX, it's been a phenomenal roller coaster really of up and down movement. But some added pressure here this morning, just given a weaker Asian session and also a couple of individual stock-related news pieces. So Deutsche, as I said, down 6, but Commerce in combination with that down around 1.5% as well. Elsewhere, you've had what looks like a little bit of profit taking possibly on some of the dollar longs, given the fact that Janet Yellen, we'll look at her comments shortly, just pretty much ratified what the market was expecting, that we're going to get a rate hike in March. So it's kind of buy the rumour, sell the fact almost type price action. The dollar actually weakened rather than strengthened, and it's weakened again a touch this morning. In combination with some technical breaks in the euro-dollar currency pair, just accentuating some of that movement on the upside. You can see we broke that Friday high. Looks like it's triggered some stops there on the break of that, and then also the highs technically that we were printing, that kind of double top back from the end of February. We ran straight through there up to the brief highs we've just seen here at 106.01.5 before then just seeing a bit of a pullback, or excuse me, 106.42.5 before a bit of a pullback to that level. So just coming back to it here, be interested to see whether or not any potential further profit taking could be a potential classic long here in the euro currency on this pullback. Likewise, sterling is underperforming again a little bit. You remember that divergence play that we had at the end of last week, still moderately apparent this morning, where you've got a bit of alleviation of the French political jitters, if you like, with Macron seemingly just widening the gap over Le Pen, with Fillon still remaining under pressure, albeit over the weekend he said that he's still very reluctant at this point to step aside. Then also from the UK point of view, you've got some other things coming up this week. Notably on Wednesday, you've got the spring budget as well to look out for. But let's just get it underway then, and let's recap some of the news flow, and it'll make a bit more sense as to what we're looking at this morning. And starting off with Friday evening, we had Janet Yellen, of course, the market awaiting the Fed chair to speak to see whether or not she would change the tone, i.e. become a little bit more dovish, or would she ratify the kind of hawkish tones that we'd had throughout the whole of last week, really initiated by Dudley and Williams, where we saw that probability rise up from around 50 to 90%. And what she said basically was that hinted at a more aggressive rate path upon locking in March. Said that rate hike this month is likely appropriate. And so pretty much ratified then the market's thinking that March is all but a done deal. And if you look at the way the market is pricing, well, if you go all the way back to the Fed release of their minutes, really it was William Dudley's comments which really signalled the willingness to raise rates, given more senior stance on the FOMC, or more influential in that respect, being somewhat more erring on the dovish side but sounding hawkish, much like Brainard as well last week, the uber dove if you like, if there is such a thing, on the Fed turning to a more hawkish, and all being ratified by Yellen, which means as of this morning we're now pricing in a 94% probability of a rate hike occurring on the 15th. Obviously the one thing that could jeopardize this, or at least dampen that nearly full-on 100% priced in probability, is non-farm payrolls. That will be coming this Friday. Even though I think that even if that was a disaster of a report, I don't think at this point that's going to really mean that the Fed are not going to act now in March. Likelihood being that we'll get, if anything, could be slightly weaker on the wage front, but relatively consistent job creation that we've had in the States for some time. And given the strength of the underlying economic data that we've had more recently from the Fed, it should be a logical move for them to now take action, irrespective of a one-off negative number, if that were to be the case. So moving away from the Fed, the other thing you've had, of course, over the weekend was China. We were talking about this at the end of last week. You've had the Chinese National People's Congress. So this is one of the key bellwether weeks, if you like, in China, because this is when the government, and then by default the central bank, are looking to outline their targets for the forthcoming year. And it was important because China has cut its growth target for the year. So the world's second largest economy, pushing through painful reforms to address a rapid build-up in debt. We're looking at China aiming to expand its economy by around 6.5%. Now 6.5%, obviously by comparison to that of the Western world, is a phenomenal amount, or high growth rate. However, China setting it at 6.5 is actually a downgrade from the range that they previously issued this time last year of 6.5 to 7%. They ultimately achieved 6.7. So a little bit of a downgrading of their growth going forward. Maybe that's just taken a bit of a shine as well off the performance of the Asian session, which came, of course, in combination with this headline that you might have seen. Just move my screen over. This was North Korea has fired missiles into the Sea of Japan. Now, this isn't completely unusual activity, I'd say, in that particular geographic region. North Korea do have a tendency to be ultra aggressive in nature in their verbal rhetoric and also from missile test launches. But North Korea fired 4 ballistic missiles into the Sea of Japan on Monday in a move likely to escalate tensions that are already running high in the region. It does, of course, come after reports where North Korea dominated headlines in recent weeks about the high-profile killing of Kim Jong-nam, the half-brother of the Supreme Leader Kim Jong-un. And so you can see here the borderline, if you like, and the close proximity, for those not familiar with the region, between North Korea and Japan. And you can see how these are highly contested waters in the Sea of Japan, and where the 3 missiles landed this time round. This, of course, also comes with the White House last month starting a comprehensive review of US policy on North Korea. So, there's a lot going on at the moment from a change of leadership, if you like, from major powers globally. And so North Korea just making a few noises overnight with these missile tests, which have just created a slight degree of market uncertainty. Nothing massive. A moderate amount, though, saw a negative Asian session in combination with the downgrade in economic growth expected for China going forward. Okay, moving on. Looking elsewhere, we've talked about French politics and the fact that essentially confirmation over the weekend that Fillon has no intention of standing down in a presidential race. In fact, there was some French reports that Alain Juppé, who is his basically number 2, there was reports that he said that he would only run if Fillon stepped down, and other reports suggesting that he wouldn't even run in that scenario anyway. Seems to be all to the detriment at the moment of the centre-right party. So at this point, be keeping an eye on the polls for any further influence than this could have for Macron being a more centrist-leaning politician rather than the National Front, which are far right. Looking elsewhere, a quick look at the Netherlands, and this is likely to build up now. We're only around 14 days from the Dutch elections, so going forward, I expect this to be a more prevalent theme, or a growing theme at least, in the financial markets. And firstly, just to put in a bit of context, this is dating back really from the last elections that we've had. So 2012, 2010, 06 and 2003. And what you're looking at here is really the changing of the landscape. Obviously, 2003 was shortly after the creation of the euro, if you like. And you can see the far distance that you had. The Freedom Party, i.e. the most furthest right-leaning, basically was absolutely zero support or number of seats in the lower house. But you can see how here it's gradually picked up to the point where it came down slightly, and this is Geert Wilders' party, the silver or grey line. But look at the change in landscape that we've had, where the leading parties, that of the Christian Democrats and Labour, have dramatically fallen since the last election, and that's fueled this move and this populist rising to the freedom far-right movement. So that kind of gives the landscape, if you like, and how the popularity has changed in the Netherlands. And we've had quite an interesting development over the weekend, because everyone's been so fixated, the press certainly. I think a lot of this is quite a global thing we've been seeing in the way the media has been covering these events. It's obviously a lot more of an exciting, sexy story, if you like, to cover things like Le Pen, things like Geert Wilders, just given the fact that they're far right. Certainly much more sensational headlines that you can write around those types of political movements. But what we've had over the weekend is the Dutch election wide open, as parties vie to pick up the Wilders vote. And what you've seen here is the Dutch election wide open again into the last full week of campaigning, as the populist message of Geert Wilders has declined and Prime Minister Mark Rutte failed to pick up the balance. So essentially, polls showing 5 parties are now in contention to place first in the March 15th vote. So leaders to capitalise on the opening over the weekend. Rutte touted his Liberal-led government's economic record, while the Wilders said it would be untenable to exclude his Freedom Party from a coalition if it scored highly. I think this was it. This was the stat of the weekend polls. According to the latest one published on Friday, late on Friday, the Freedom Party would get 25 seats in the 150-seat parliament. That's down from 29 seats a week ago. The Liberals at 24, down just 1. The gap between the two front runners and other parties then is narrowing. And what's been quite interesting here, though, is that the Freedom Party have actually lost out in some popularity going into kind of crunch time in the last 9 days until we get that voting day. So it might not be a foregone conclusion that they'll become the outright winners, but don't forget as well, we are looking at the potential 5-way coalition when it comes to Dutch politics going forward. Okay, quick look at some of the other headlines, and there's been a couple of equity moves of significance this morning. Firstly, we did talk about Deutsche being a bit of a weight on the DAX index this morning, which is obviously on the back foot. So Deutsche Bank board to meet on an $8.5 billion capital raise. They're confirming possible sale of the equity part of fund unit. The bank may reverse plan to sell Postbank and shake up top managers. So I guess this is all part of the ongoing restructuring that Deutsche is under at the moment. I was reading some other press articles, though, that were saying that this is quite opportune timing. Obviously, if you look at banks or financials as a sector, they've rallied a huge degree since Trump came into power, especially on the state side, where bank stocks like Goldman's are up in excess of 35% on this premise of potential watering down of regulations in combination with expectations that interest rates are going to be rising, which would be beneficial on the margin front for these bank stocks, which have suffered in this zero interest rate policy era. So maybe it's a better time now that people will be more favourable in order to participate in these type of capital raising exercises. So Deutsche looking to come to market. But in the short term, it's been met negatively this morning. They're down, well, at the open they were down about 6.5%. On the flip reverse of that though, you've got Standard Life and Aberdeen Asset Management. They've agreed to a merger deal which would create the UK's largest asset manager. So following reports of £11 billion takeover over the weekend, the two companies said that they would recommend in an all-share deal to shareholders, completing the transformation of Standard Life's business from a traditional insurer into an investment powerhouse. So to give you a rough idea, Standard Life up 9%, Aberdeen Asset Management up 6.2%. So pretty punchy level M&A deal being announced this morning. And then elsewhere, another solid mover over in mainland Europe has been Peugeot. They're up around 5%. The French company that owns Peugeot and Citroën has struck a €2.2 billion deal to buy General Motors' European unit, including Vauxhall. So looks to be on a slightly negative macro kind of sentiment this morning, developing overnight in Asia for those aforementioned reasons. The Deutsche element as well to throw in the mix, but a couple of individual single stock standouts to be aware of. Looking elsewhere at the calendar today, there's nothing really too much going on this morning. You're going to have to wait until the afternoon where you get the factory orders coming out of the US, and also these are actually revisions to durable goods, so unlikely to have too much of an impact. The factory orders one though to keep an eye on. You've also got Fed Kashkari speaking, and then I believe then this will be the last comments before we go into the blackout period, which is obviously that week period where there will be no comments from any of the Fed members going into the two-day meeting, which will commence on the 14th of March, with the announcement coming the evening of the 15th for the Fed. So pretty quiet session overall, and looking at the way the markets are reacting this morning, slight negative connotations, continuation of a moderate divergence between euro dollar, which looks to be buoyed here by more of a bit of a technical break this morning, and also a bit of a buy the rumour, sell the facts, and some profit taking on dollar longs after confirmation from Janet Yellen that March is pretty much a done deal. And so the markets are pretty much used to that fact now. Keeping an eye though, if we're going to get any further upside here in euro, I'd probably want to see some more information surrounding these French polls. Expectation being any further decline in favourability for the centre right. Does that then boost support for the likes of Macron? If that continues to widen the gap with Le Pen, that could act as another kind of underlying supporting factor for the euro-dollar pair. Whereas in the UK, the pound looks pretty quiet at the moment, sub the pivot, and doesn't look as interesting really in terms of a technical setup or fundamentally at this point than the euro, given the fundamentals at play. Obviously looking out for any further updates in regards to the movement back from the House of Lords to the House of Commons. Then you've got the budget to navigate as well midweek, which may just contain some of the severity of the price movement going into that midweek announcement. Elsewhere, gold up already $8, found a bit of support around pivot earlier this morning, just given the slight sell-off seen in Asian equities and likewise in Europe this morning. So in combination with that, lower equities, higher gold, kind of flight to quality bid, fixed income slightly higher, bunds also up this morning, reversing a lot of the sell-off that was seen towards the end of last week, and up around 40 ticks this morning. Okay guys, just going to leave it at that though for the time being. Let you get on with the session. So I'll see you in the chat room and I'll catch up with you there. Thank you very much.